Hello and welcome. I am Jyoti Krishnan from the products team, Franklin Templeton India. We are happy to announce the launch of our new fund, Franklin India Balanced Advantage Fund. Today we have with us K Rajasa, the VP and Portfolio Manager for this new product. She's been with us for over 6 years and she manages our hybrid suite of products. Welcome Rajasa, very glad to have you here with us today. We are really eager to know more about this new fund. So please tell us.
Thanks, Jyoti, for having me here. We are very excited about this new product launch, especially one that's coming after several years.
So great. If you can tell me something about the asset allocation of this product, is there a model that is used for the determination of the asset allocation?
FIBAF will use a combination of quantitative and qualitative factors to determine the equity asset allocation. The asset allocation strategy that backs FIBAF is derived from Franklin Templeton's in-house proprietary dynamic asset allocation model, which has been successfully optimized for the inputs that we use and the periodicity of asset rebalancing. The quantitative parameter that we will use is based on the month-end weighted average price to earnings ratio and price to book value ratio of the Nifty 500 index. As per the ratio bands, the corresponding equity allocation will be identified for both of these separately, and the parameters will be given 50% weightage and added to arrive at the final equity allocation. This may range from 15 to 85%, and we will rebalance the equity and debt portion on a monthly basis. On top of this, we will overlay this with a qualitative assessment of various factors that includes macroeconomic trends, policy backdrop, aggregate corporate fundamentals, market liquidity, etc. We may then adjust the quantitative factor-based allocation by plus or minus 15%. We will endeavor to maintain the gross equity exposure between 65% to 100% to enable equity-oriented taxation.
That sounds quite interesting and intriguing. It's qualitative plus quantitative, definitely looking forward to that. Could you also tell us something about the investment style of this product?
The fund will adopt a flexi-cap approach for the equity allocation part. We will use a blend of growth and value style of investing. In case of debt allocation, the scheme will endeavor to invest in high quality instruments with over 80% of the portfolio in AAA rated papers. This can be both government bonds as well as corporate bonds. And this combination, I believe, will make it suitable for investors looking for best of both worlds.
You also mentioned derivatives. So could you tell us how is this derivative portion going to be managed in this product?
So the derivatives is mainly going to be used to rebalance and hedge the portfolio. So primarily we'll be using the index futures.
Now we know a little bit more about the product. So if you can tell me how is it that it's going to help me manage my cash flows, or if I am looking at a regular cash flow kind of a product, how is this product going to help me? If you can just tell me.
So the FIBAF will also offer investors a systematic withdrawal facility that will allow them to assign a percentage withdrawal from the scheme on a per month, per quarter or per year basis. Investors can opt to withdraw a fixed amount or capital appreciation that's subject to a prescribed minimum amount per installment. Up to 10% of the units may be redeemed without any exit load every year. In case of multiple transactions each year, units will be redeemed on a first in, first out basis. If the 10% exit load limit is not availed during the year, it will not be clubbed or carried forward to the next year.
The other thing I wanted to ask you was about the general positioning for this fund. You know, if an investor has to use this in their portfolio, apart from this, how best can they optimize the usage of this product in their portfolios?
So FIBAF is an all-season product that aims to manage volatility in the scheme by employing a dynamic asset allocation strategy and the use of equity derivatives to alter the net equity exposure. Besides, the fixed income part potentially cushions the impact of market volatility on the portfolio. There are several ways this fund can be positioned. One, it can be used as an interim parking vehicle, typically as a systematic transfer plan, a destination fund for investors trying to rebalance their portfolio to gradually build a lower risk portfolio. In addition, FIBAF also offers a systematic withdrawal facility that allows investors to assign a percentage withdrawal from the scheme on a periodic basis. Investors can opt to withdraw a fixed amount or capital appreciation subject to a prescribed minimum amount per installment.
Thank you so much, Rajasa, for that insightful perspective on Franklin India Balanced Advantage Fund.
Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.